from Cornell University in Ithaca, upstate New York. On behalf of the Emerging Markets Institute and eCornell, welcome to the webinar, Indian Financial Markets, Uncertainty, Drivers and Outlook. My name is Lourdes Casanova, and I am the Gail and Rob Cañizares Director of the Emerging Markets Institute. India has been one of the fastest growing economies in the world for over a decade, and this year will be hosting the G20 summit. All eyes will be on India. From rapid population growth to robust innovation, India's stock markets have been among the best performers and have provided favorable returns to both domestic and foreign investors. However, given the uncertainty in geopolitics, world trade, and regulatory governance, India's markets may face a myriad of potential headwinds. It is hard to talk about India financial markets without referring to Adani stock, which incidentally had been one of the best performing stock among emerging market multinationals last year, and it was highlighted in the Emerging Markets Institute report 2022 published last November. As most of you in the audience may know, Hindenburg Research, an investment research firm focusing on activist short selling, founded in 2017 and based in New York City, has alleged several financial malpractices within the Adani Group. And this has resulted in a massive drop in the price of the stock. The jury is still out on the Adani company whether the firm indulged in questionable financial practices. But many experts have noted that the position of Hindenburg to short Adani stock while issuing the report also raises questions about ethics in financial dealings. The Indian economic success story is more than the success or failure of one stock. Today, the country is enjoying a significant period of growth and investment driven by sound economic policies and a strong investment by the government in the core infrastructure of the country. With all this, you see a change in sentiment amongst the young professionals in favor of entrepreneurship and technology. As such, India has pioneered a unique model of coupling public investment in digital infrastructure along with an open democratic approach to private innovation. My colleague Anne Miroux will talk about this, but just I wanted to say that this is exemplified by the India Stack, a collection of free application program interfaces or APIs that allow a bottom-up open digitalization in the economy. As an anecdote, I wanted to share with you that the Emerging Market Institute organizes every year the Cornell EMI Mark Mobius pitch competition. We are about to launch the registration to the 2023 one. In last 2 years, the winners were startups from the Indian Institute of Technology Kanpur Incubator in Delhi. So two weeks ago, I was curious and I went to visit the director, Ankul Agarwal. I wanted to see the secret of the success. And I was very impressed and also met the 2021 winner, a startup called Off-Grid, that the company manufactures zinc-based batteries instead of lithium-based. As you know, lithium is not easy to find and is mainly in Argentina, Chile, or China. But India is the biggest producer of zinc. So these zinc-based batteries are very important for the country. So I had the opportunity to ride a rickshaw with zero emissions with a zinc-based battery. I also visited the 2022 winner, a startup called Life and Limb, who manufactures prosthetics that move based on sensors at a very affordable price. I could sense, I could live the success of Noida Valley, not Silicon Valley, but Noida Valley, where these startups are located. There are many other sophisticated, successful incubators showing the dynamism of Indian entrepreneurship. In spite of the drying up of financing, India has now the third largest entrepreneurship ecosystem in the world, and my visit to the IIT incubators makes me believe that it will continue to be so. We have 3 speakers today that will dwell on these issues: Anne Miroux, faculty fellow at the Emerging Markets Institute; Mark Mobius, the founder of Mark Mobius Partners; and Chen, who is portfolio manager at Fidelity Investments, and we are assisted by the Cornell team. Thank you very much. And also Ravin Nanda, who is an undergraduate student at Cornell and a research fellow at the Emerging Markets Institute. But before, I want to pass the word to Anne, who is a faculty fellow at the Cornell Emerging Markets Institute. Anne, the floor is yours.
Thank you very much, Lourdes, and welcome to all. Before going into the topic of Indian financial market, I'll give an overview of the Indian economy. But I'd also like to say that India nowadays is highly visible, and especially recently because of its presidency of the G20. But it's not only the G20 effect. Actually, India has been assuming progressively an increasing role on the global scene. And there are 2 types of reasons for this. Some are more conjunctural, and one of them is actually the prevailing geopolitical situation, with on the one hand, Russia versus the West, or China versus the US. And it is as if India could offer perhaps a third option, which is not to choose a camp, but try to maintain a dialogue with all parties. So this is perhaps, I said, the kind of conjunctural reasons which puts India increasingly on the global scene. The other reasons, the second reason for India increasing role on the global scene is in a way much more fundamental, and Lourdes has mentioned it. It's actually its significant economic rise. As she said, India nowadays is the 5th economic power in the world. It's a rank it's occupying since 2020. And that's due. So we look at the growth. We look also at another feature of India, which is the innovation and technology landscape. And then we'll also have a little words about the corporate sector. So what's interesting is actually the growth of the Indian economy sometimes has not been mentioned as much as the Chinese one. But if you look at the past decades, the 2010s, India reached on average around 6.6% of annual growth rate for the decade. And for the second part of the past decade, India had the same average growth rate than China. It had a significant rebound in 2020, almost 9%, which was one of the highest in the world. And it's maintaining a good performance in 2022, even if there are headwinds and downside risks. And we will mention that a little later. As I said, it's the 5th economy in the world. And what's interesting is that it's all above France, above the UK, but it's not very far from Germany or Japan, which each has about $4 trillion of normal GDP. So that basically translates into a number of observers saying that by 2030, India may well be the 3rd economic power. So this is really a fundamental reason for the country really occupying a much larger position on the global scene. And perhaps, at least in Europe, where I am based, giving to people a different perception of what India was, very different what we used to have, including a number of visits by presidents from Europe, for instance. It's also an economy where we have talked a lot about the role of services, but manufacturing is definitely growing. And there is a recent report by Deloitte, which is highlighting that it's definitely positioned to grow. And it has, India actually is sometimes considered, and we will see to what extent that happens, as a potential supply chain hub for those who are migrating away from China and who want to explore other geographies. So all these are the economic factor. And then, of course, the perhaps in a way, a massive argument, which is a demographic factor. I mean, India is supposed to be in 2023, I'm sure you have read it in many newspapers, the most populated country on earth with about 1.4 billion people. So this is the way, it's a very important element because of course it's potentially many consumers, but that we can discuss. So it offers a lot of opportunity, but the challenge in terms of the budgetary constraints and the budgetary impact is also to be taken into consideration. So that's the first element I wanted to highlight. The second one is that making in a way a parallel with other very big nations like China and so on, the innovation and technology rising capabilities of the countries. There has been significant advances, but I just like to quote what is happening with the Indian space sector, which is a rapidly growing industries. And the country launched a number of space exploratory missions, one of them to Mars, a number of them actually to Mars, and they were successful. And it's actually positioning itself as a provider of satellite-based services. So that's just an illustration of the raising a really and definitely very significant technology and innovation capabilities of the country. Lourdes mentioned a moment ago elements relating to digitalization, but definitely the digitalization of the Indian economy is one of the major trends of the last decade. And what's interesting, because about 50% only between quotes are using the internet, but the rate of increase of the number of people using the internet over the past 3 or 4 years has been considerable. And again, an illustration of the change is the ID card system, the Aadhaar system, which provides an identity card, so to speak, to almost every Indian. And this is obviously a technology called prowess, because we are talking about billions of people. India actually is a nation which is remarkable, again, Lourdes mentioned it, by its startup movement, and in particular in the fintech sector. Actually, in 2022, there were about 20 fintech unicorns, again, one of the highest number in the world. And this trend of digitalization has been driven by the reforms of the government, precisely pushing the countries toward a digital economy, toward what can be seen as modernization. The UPI systems that Lourdes mentioned a moment ago is also relatively unique. Well, it facilitates the interface for the transition between banks and also between a person and a merchant. And it is regulated by the Reserve Bank of India. And again, it's not, we are not talking millions of people, we are talking 1.4, at least potentially 1 billion people. So that it's a nation with a lot of technological and innovative capabilities. In a way, as I said, parallel with other very important and major economies that I mentioned a moment ago. Now, we have to give the full picture. And Lourdes mentioned that there are challenges and headwinds. Among the challenges, perhaps the most important one is the poverty one. India is still really a low-income country. The GDP per capita in India is $2,500. That is less than Bangladesh. It's really in the lower end of the spectrum. If we compare, for instance, to Thailand, which is about 17, or to China, it's $13,000 per capita per year. Another indicator is, I've talked about the innovation and the technology. India has excellent technology institute, excellent university, but the literacy rate is still high. It's about 20 to 23%. In spite of the significant progress one has to reckon of the past 5 years. So this is somehow the structural challenge. There is a lot to do for the government and a lot, of course, of budgetary implication. And the headwinds, of course, are linked to the conjuncture. We have the global economic uncertainty. We have the tightening global condition, which leads to inflation. And as a result, tapering consumer spending. For the Indian economies, this is very important because internal demand is a key engine of growth for India. And then there are other, of course, factors which could be, head wave or monsoon, which could affect the agricultural sector. And in the climate change moment, I would say it's not to be excluded. So there are challenges and there are headwinds. And actually some observers, in particular in the Nomura Bank, are a little more perhaps cautious than the upbeat sentiment that Lourdes mentioned a moment ago. Now, if we look at the corporate sector, I would like to highlight a last point, which is the size of the firms, Indian firms, is not really commensurate with the position of the country in the global economy. India does not have a lot of very, very big firms. Only 9 Indian firms are in the list of the top 100 firms in, by Fortune. So top 500 Fortune global firms, you only have 9. Compared to China, which was 134. So you can see there the difference. So not a lot of very big firms. And in addition, not many firms are truly global. And it's interesting to note that actually India is much more a recipient of foreign investment, as any country is making and growing and developing, than a source of foreign direct investment. Just a few numbers. India's number 5, 6, 7, depending on the year, in terms of host of foreign direct investment flow, but it almost hardly featured in the top 20 investors. Actually, last year, it was not in the top 20, and it's clearly below Thailand, for instance. So that gives an indication of the interesting situation of a very powerful country that, however, does not have huge multinationals as we can see in India. And the last point, another illustration, if you take the list of the top 100 multinationals from emerging and developing economy, that is a list which is published by UNCTAD every year, the UN Conference on Trade and Development. Last year, you had 5 firms in this top 100 multinational from emerging countries, which is less than Mexico. Again, for a country of the economic size of India. So that's quite interesting, and it perhaps reflects, it leads us to reflect, and I hope that's the kind of question we can discuss with our guests. And I thank you very much for your attention.
Great. Thank you so much, Anne, for your insight about the overall economy and economic conditions. I think it's going to serve very well as a foundation for when we discuss financial markets. So now it's our honor to introduce Chen, a portfolio manager at Fidelity Investments, who's going to discuss a bit of the market conditions in India and some of the overall themes that investors are seeing in India. So just to kick it off, what are the most interesting opportunities, or what are some themes that excites you about investing in India?
Sure. Hi. Thanks, Professor Casanova and also Ravin for inviting me to the seminar. What a great seminar that we discuss all the current topics that are happening in emerging markets. So I've been in the emerging market team within Fidelity for 14 years. And I grew up in China, but I also got my education in the US and have been in the US for more than 20 years. I've been traveled across 30 different emerging market countries in the last 14 years. So I'm obviously very excited to talk about this topic in this forum. So I actually, during the G20 time when they're there, I'm actually also in India, sort of last month. And it's actually a very refreshing experience to actually see, so many changes, post-COVID. So I'm going to talk about first, there are a couple very interesting opportunities and themes that are really excite me about investing in India. The first thing is really about the organized retail change, since COVID. So India actually has the lowest organized retail mix in the emerging markets. So basically, think about the mom and pop shops that you see in the corner versus, a nice shopping mall or a nice, shop that you can shop for your goods. So most Indians are still shopping at your corner mom and pop shops, as opposed to, actually shopping at a very organized retail format. So there are a lot of new brands emerging, new companies showing up because, actually Indians now, moving up out of the shopping habit to actually shop at nicer places. And so basically we are seeing the organized retail formats are growing much faster than the economy right now. So there are a lot of interesting companies to invest for this theme. And the second thing, as Miss Annie has talked about, is the development of the internet. When I travel across India, everybody has a phone, and actually a big portion of the population now has smartphone with very fast internet. So we have seen a lot of emergence of internet companies in India that actually have millions of shoppers and followers that using their service. And if you think about building a shop in the corner of the street, it's very difficult, while actually having a phone and being ordered online is actually much easier. So and even in the middle of nowhere in India. So now when I travel to lower tier cities, like tier 3, tier 4 cities in rural India, actually you see very cool people that actually know all the new brands because they actually have a smartphone on hand. So there is also a lot of new companies within the internet space, for us as an investor to look at. And there's actually a lot of recent IPO of these internet companies that's showing up. So like there's a lot of work for us to do and picking, kind of the winner versus the loser in the area. And that's the second thing that we are looking at. The third, I think, is the infrastructure built out in India. If you actually travel in India like 5 years ago or even 7 years ago, you'll be struggled to get around. And then you would travel on a dirt road without proper pave in some kind of rural area. Today, if you travel around India, like I was really pleasantly surprised by how smooth the logistics is. And there are so many new highways that are being built in India. And there are just so many cars now, actually on the road. When I visit all the car dealerships, and it's like populated with people. So I think the infrastructure spending and build out also have a positive impact on the economy. And then if you look at real estate, it has been under pressure for more than a decade, with a lot of financial troubling and the real estate crisis has lasted a long time. But I think in the last 2-3 years, we are seeing a strong recovery of the real estate sector. As you can remember, like for China, real estate has been driving a boom for the Chinese economy for more than 20 years. So I think India is still at the very early stage of an infrastructure and real estate build out. So this can actually support the economies, for a while. And I think, on the third point, on the fourth point, a very interesting theme is after the demonetization, we're seeing a rapid adoption of UPI. So basically, it drives a lot of formalization of the economy. And now it used to be like people paying cash. And when I travel around in India, now people using UPI like a wallet. It's very convenient. So I think it also drives increased, loan. For example, when you used to be like you all pay cash to buy a car, buy a motorcycle, or sort of a medium ticket item. But now, with more inclusion, financial inclusion, a lot of people are able to get a new loan, to buy a larger ticket item. I think it also helped a lot of sort of the middle class of Indian people to actually move up in consumption and have a proper lifestyle. So those are kind of the exciting things I see in India. So that's kind of like the first topic I want to talk about. And the second topic I want to talk about is the similarity and difference for Indian stock market versus the other emerging markets. So I want to talk about the similarity. So as you can imagine, because it's still an emerging market, and then the economy is facing risk and have cycles. So basically, a lot of the Indian companies are still young, so they are very impacted by the macro in India as much as the other emerging markets. So as a portfolio manager, when we actually look at company, we not only look at company specific factors, but we also look into what happened with the economy, with regulation, with government, how is that going to impact, the specific of that sector and companies. So that's very similar. And also like, the difference I would say is like, India actually has a lot of listed stock. If you actually look at like the mid and small cap space, India has a lot more listed stocks than some other countries that are at its size of GDP. For example, if you compare to the stock market of India versus Brazil, Brazil has, like a handful of stocks, like 200-300, kind of stocks mostly for people to look at. But in India, it's much, much bigger. So there are actually a lot, large number of listed companies. And I also would say the second difference is I do see a strong capital allocation, kind of conservatism in a lot of management teams, because a lot of the Indian business is actually family owned. So you actually have 70 years old, like, generation, past generation type of company, and promoter owns a large amount of chunks, of those, of the shares. So a lot of these family-owned businesses are actually conservative run because they're thinking about like, not like the next 3 years or like, 5 years. They're thinking for like the lifelong, right? So they want to pass this business after the next generation. So a lot of these businesses are actually have more sound, like, reasonable like capital allocation discipline and conservatism. And the third thing that I've observed like excites me in India is the demographics. Obviously, this has been talked about with a lot of people, but actually seeing it, like if you look at the US market, we have a shortage of supply of laborers. That's why like, you actually see wages going through the roof in the last 2-3 years. However, if you look at India, there's just so many available labor still available. And I think that's a demographic tailwind. And a lot of those people are young and they're vibrant, and they're very eager to learn. So I think that's also like, an area of opportunity for India. So those are the similarity and difference for the Indian market. So lastly, I'm going to talk about like, as we are seeing the risk of global slowdown during this fast tightening cycle, what are the potential risks I've seen, potentially for investing in India? So I think the first thing is, we are actually seeing, a little bit of a slowdown from an Indian consumer. I think if you look at like post-COVID, Indian actually have done really well on the service sector, on the recovery side. But still, there are areas like pockets of high inflation because like food and, these staples item is still a large chunk of most of the Indian families' budget. So as food inflation and all these, goods have high inflation, it does impact a lot of, the consumption power of these large consumers that we've seen in India. So that's an area like for us to watch. And the second area is the election in 2024. So basically any election in emerging markets should be watched really closely. Prime Minister Modi has done such a tremendous job in the last few years, transform the economy. So I think every investor is going to watch, sort of who sort of if he's going to stay and then like, what happened with the change on the government. So those would be the two things I highlight.
Wonderful. Thank you so much, Dee. That was a great overview of the financial markets and a interesting outlook that some investors may have. I just have a few questions, and I think that India, as you mentioned, is very exciting for a few reasons, and there are a lot of kind of niche opportunities and different types of business models, such as family businesses that are more prominent in India than in other parts of the world. Just expanding on that a little bit more too, how do you think family businesses have actually been able to, or if they have at all, make some sort of tangible impact if you compared to non-family owned businesses? Is there a benefit that family businesses have in India compared to the West, where it's not as prominent? What is your take on that?
So I think the benefit of the family business is obviously a more long-term thinking mindset, right? So if you think about the U.S. manager or CEO, he was appointed by the board, and basically he has a KPI that he needs to hit probably for the next 3 years or something like that. But usually, like, you know, unless you have a very, you know, strong CEOs that have like multi-decade kind of assistance in the board, with the relationship with the board, it's somewhat harder to kind of, you know, think about the longer term, like multi-decade kind of strategy questions. When you actually have a family business, because the family thinks about long term, so a lot of the things they do think about like much longer term impact to their business. I think that's kind of on the positive side. And I think there is like pros and cons of the family business, because there's a high ownership of the family business. So actually, like, liquidity has been an issue in India, because, you know, there's actually not a lot of share traded on the market for the other investors. And the second also issue is, like, if you actually have too many family members in the company, it's harder to recruit outsiders, because they will think that, like, it's harder for them to blend in. So I do think there are actually a lot of family businesses have made the transition of a family ownership, but professionally run managers. So the manager and the family owner actually develop a very, very close relationship together and kind of build the business together. And I think that's actually a pretty good model.
Awesome, thank you. And just another question, shifting more to the growth that we've talked about, that both Anne and Dee touched on. You know, India is seen as a very rapidly growing economy. Markets have seemed to realize that too. Capital flows are coming in from a lot of diversified sources from around the world. Do you think that this growth is sustainable? What are the factors driving this growth? And what are the factors driving this growth?
So as I mentioned, like, sort of in my first remarks, like, I think demographics is a tailwind to drive that. And then, you know, you have pockets of growth from, like, you know, the real estate sector, you know, CapEx, government spending, and also consumption is growing. So all these is like a driving factor of the growth. But I also wonder, you know, when we think about an emerging market, it's not an in linear line. So obviously there's going to be ups and downs. It's always a cycle. So as we see during the global slowdown, I think India won't be like immune. So I think that's the risk, because we actually have a lot of new investors in India, where during the COVID time, I think the number of investors in the stock market who actually investing in stock personally have increased dramatically. And a lot of these investors actually doesn't have a lot of experience and don't know much about the history, like, you know, longer term history of the companies. And while valuation is relatively high in the Indian market, when we actually going into a cyclical slowdown, so there is a risk where, like, you know, people are not very well prepared for these kind of cyclical slowdown in the economy. But I think, like, when we actually, as an investor in emerging market, we're prepared to look at multiple cycles. So we're not just thinking about 1 year, 2 years, but we are more thinking about the full cycle.
Wonderful. Thank you so much, Dee. Just shifting gears a little bit and opening up the floor back to Lourdes and Anne. Obviously in the news, the Adani crisis has taken the world by a storm a bit, specifically in India. And in response to the infamous Hindenburg's report, Adani claimed that it was an attack on Indian markets, the massive short sell. So I guess it would be interesting to hear, do you think his argument is actually sound, Lourdes or Anne?
Anne, you want to start?
Well, I will start, and I will begin to say that the jury is still out. So I will not take any position on whether it's not one side or the other, but we know also the short selling business. We know what's behind this. So as I think has been mentioned already at the beginning by Lourdes, all of that has to be taken with a piece of salt, as you say in English. But bottom line, yes, the jury is still out. That being said, it's not an isolated case. Not in India, but it did not make the headline. But for instance, I'm thinking of a company which we have been working with Lourdes on Jumia. in Africa. Jumia was doing very, very well. It's an e-commerce firm. Its headquarters was in Nigeria and so on. It's still very powerful. But it launched on the New York Stock Exchange, I think it was around 2019. And when it launched, the value of its share rose up to $40. And then Citron came with allegations, and that there was also some misrepresentation in the report. And the bottom line and the outcome is that the value of the share fell a lot. By September, I think it was on the New York Stock Exchange, let's say by spring, by September or October, the value of the share was about $5-6. It's a major blow for a company, still to be completely proven again. I will not go into the ins and outs of that. And I would almost say that the company has not really recovered. It never went back, to like a $20 a share. So I think that also is that kind of incident or accident, or call it the right way, is not isolated, and it has really to be seen very, very carefully. I don't know what's the situation for Adani, but I think all that has to be kept in mind. The other thing I wanted to highlight is that it takes us back to the issue of governance on stock markets. And one has to recognize at least that in India, like in a number of other emerging markets, there is a movement towards increased governance, the same way there is a movement to ESG. It's a topic we studied, I think, in 2021. And we took actually India, we looked at India, and for instance, the Stock Exchange of India, SEBI, has paid particular attention over the past 5 years on this governance issue. It has issued a number of, guidelines. For instance, one of them is that 2/3 on the remuneration and audit committee of listed firms, 2/3 of the directors must be independent directors. They have also taken action by creating a committee, which is called the Kotak Committee. It was created 5 years ago precisely to work on governance issues. And it has issued also guidelines to ensure some stewardship for mutual funds or insurance funds and so on. So I think one has it has to be put in the overall context of what's actually happening in Indian financial market. If indeed malversation have been taken place, one should not generalize. I think it's still a very careful issue to be dealt with.
Great, thank you so much, Anne. And this question, again, is open to everyone, but touching on what you said, it may be a case-by-case basis, but do you think the Adani case is just specific to Adani? There was an issue with over-leveraging and, some interesting finance operations that were going on that I won't get into it, but it was a bit debatable as to whether those practices were actually morally fine. Do you think there's these risk factors are just case by case, or are they specific to Adani, or do you think that there's the risk of having some of these other practices occurring in other Indian companies?
Okay, before I answer the question, I just wanted these things happen that Mark Mobius, very unfortunately, quite likely will not be able to join today, unfortunately, because had problems accessing the Wi-Fi. So these things happen. And then we find ourselves 3 women speaking and with Ravin. So I am in many webinars, and let me tell you that usually it's the opposite. I'm the only woman. So Anne and I have found ourselves. So let's celebrate Women International Day and all women webinar. So going back to your question, Ravin, thank you very much. We need you for gender diversity in this webinar. So thank you for being with us. So a couple of things. One is that, and going also a little bit on what Dee was saying about having conglomerates in emerging markets. So the figure of a conglomerate is quite common in an emerging market for a number of reasons. Latin America, India, Southeast Asia, Indonesia, plenty of conglomerates for a number of reasons. One is because the financial markets do not have enough depth. So in US mainly, but also in Europe, you go to the stock market and you can get finance quite easily. And so then what happens is that a family business, again, going back to the saying that there are many family businesses in all emerging markets. So a family business starts a one business, sees opportunities in another one, in another industry, so then goes into another industry, and then one part of the business will help the other one. So you will have normally real estate, you may have a financial institution, and that's how conglomerates work and survive and thrive in emerging markets. A lot of literature has been published on the subject. Are they the saviors of emerging markets, or are at the heart of the inequalities and not allowing innovation in emerging markets? I think it is what it is, and we have conglomerates that are very innovative in emerging markets, and unless financial markets become more important, we will see still the survival of conglomerates in emerging markets. So in the case of Adani, what was very particular is that Adani went into infrastructure. So infrastructure, there is no way, requires a lot of debt. So yes, the group had a lot of debt, but if we look at other infrastructure companies, they have similar levels of debt. So that was not that unusual. So that's one thing. Again, the jury is out. We cannot say what is going to happen, but I wanted to go into what Anne said. So the work that we have done at EMI last year and this year on ESG shows that emerging markets are making enormous efforts. You think that you are the director of the stock exchange in Mexico, Brazil, or India. So what do you want? So what you want is that the stock market thrives, and hence is going to implement governance issues to avoid scandals that, as you were saying, that cannot bring not only the problems with the particular stock, in this case Adani, but with the whole stock market. So governance rules, governance regulations regarding governance, environment, or social issues are issued, and we were surprised by how much the advancement of emerging markets, stock markets in these issues. So yes, the case of Adani is a major case, and the worry of everybody was that would bring the whole Indian stock market down, but so far, of course, the Adani stock is still down, less than the worst days. It's a little bit better, has recovered a little bit, but the Indian stock market is not suffering as much as some have predicted. And one more thing I wanted to add is that it's not possible to short a stock in India. So the short happened in the US. It's forbidden to do short in the Indian stock market.
Thank you so much, Lourdes. Just turning to the audience a bit for some of their questions. Regarding risk and uncertainty in financial markets, India, as other emerging markets, impose very niche risk factors, whether it's geopolitical or trade risks. What are some of the tools that we can use to measure uncertainty in financial markets and get a better understanding of their risk profiles?
And Dee, you want to answer? Maybe Anne?
Sorry, trying to find the unmute button. Sorry. So basically, like, as professionals, we do have, like, risk management tools across our portfolio. So that's not just India. So like when we manage a portfolio, we have a lot of like quantitative tools and like sort of those two for us to manage, like, the portfolio risk. But when you mention like kind of like, because we are long only shops, so we tend not to do a lot of derivatives. And so basically we don't deploy a lot of these, like, kind of somewhat dangerous like derivatives. to manage risk in the portfolio. For us, more doing it in a fundamental way. So like we want to investigate, like do a lot of trips, trying to understand what we are investing in really deeply. I think as much as you want to investing, it's all about investing in the right people. For us, like the risk management is to know, who are the management team, who are we investing with. So, and I think, if you look to sort of the case, lessons learned for a lot of the banks who make like loans, to the family is that they're going to be more conservative, right? So when they actually make loans, they're going to look deeply into the leverage of the related business and see, what's the risk there. So basically for us, it's more like, investigating a lot of the balance sheet of the companies and then trying to make sure free cash flow and do all those right. Yeah.
Great,
Also,
thank you.
just wanted to add that when we don't know emerging markets, you are a person, you cannot know all the markets in the world. So one thing is that you have to remediate that. If you want to invest in an emerging market, you have to get to know that emerging market in depth, meaning reading local newspapers and finding ways to get more information. Emerging market multinationals do not get covered in traditional financial markets. So I often ask my students, please mention 5 emerging market multinationals from India or from, and most MBAs are unable to mention them. So I think that's one thing is lack of knowledge, and that increases the risk.
Great, thank you. Our next questions talks a little bit about the recent lithium find, and from H.T. Thomas, what impact do you feel the recent lithium will have on the Indian economy and its influence on the growing EV revolution?
Okay, so as I mentioned, yeah, Dee, you want to answer? Please go ahead.
Oh, I'll just quickly comment, right? Like, as we actually look at the EV sector globally, there's a shortage of lithium around the world, right? Like, in fact, like if you look at Tesla, they're going to mention that is actually like, a bottleneck for the growth of the EV industry. So I think it's actually great that India found its own kind of deposit, because right now, most of the batteries in India, like the EV car, the one that goes into the cars and motorcycles, are imported from China. And I think, that is a risk for all the companies that involve, doing this, right? But I do think that India has time because the EV penetration rate is still relatively low in India. And like India doesn't actually have that many cars, so let alone EV. So we're actually still in the early phase of the development, of the ownership of the car. And so I do think that India has time for the value chain to develop over time. And actually, Indian government have PLI scheme where they incentivize companies to with government subsidies to help develop the industry.
Wonderful, thank you. Lourdes, you were going to add something.
Yeah, just to add that I was, as I said, very excited with the 2021 winner of the Cornell EMI Mark Mobius pitch competition of grid, because all the research, and I could see when I went to visit them 2 weeks ago, all the research they do on zinc-based batteries. So as Dee was saying, the efforts are made to rely on their own. India is the first producer of zinc in the world. So to be able to use their own zinc instead of lithium, because now lithium is based in few countries and not enough to get for all the batteries. So there is a need to find alternatives to lithium. And again, I applaud, as Dee is saying, the efforts made by the Indian government to build their own batteries based on zinc or other ways to avoid this dependence of lithium.
Wonderful, thank you. And I think this space will definitely unravel over the next few years as it's growing so much. And other countries try to find alternative ways of finding inputs that are not necessarily dependent on China. So thank you. And our next question, if one can argue that one company can't hijack the growth story of India, but actually Adani's case has built strong confidence in the market, we've seen markets bounce back and have been pretty resilient. It indicates that regulators are required to be smart and quick in response to some of these changes. So what does this say about the overall state of affairs for regulation in India's markets? And I know you touched on governance a bit too, but how does this speak to the overall state of affairs for regulators?
So as I said a moment ago, we looked at a couple of countries. We looked at if you want a broad picture of for emerging market, I think it's almost impossible to say because there are very different situations. But just to put it in context, there is this idea that in emerging markets, the emerging markets are really lagging behind in terms of regulation. And that's not really true. I think it gives a relatively false image. And by the way, when we did our study in 2022, we found 2 emerging markets which were kind of ahead of the others, at least on some ESG element, environment, social and governance issues. And these 2 countries were, for instance, Thailand and South Africa. For actually, understandable reason, South Africa, you had a lot on social because of the heritage of the apartheid regime. So when there is a need and where there is a particular concern, action was taken. And in Thailand, interesting, there was some social aspect, but also very much environment aspect. So I think it's very difficult to give a broad and across the board picture. That is the first one. And in the case of India, as I said, there has been a movement toward increased regulation in emerging market, as well as in developed or advanced market. Perhaps the others are a little bit ahead of the emerging market, because also the structure of the country, the culture, it's not, they are not, to put it bluntly, they are not capitalist countries, stock-based countries. Even in my country, in France, the stock market is much less important than in the US. And by the way, the regulation of the guidelines, the company do things because the governments ask them to do, not because they have good feeling and they have an ethical thing. So I think this has really to be kept in mind. It's a different way to look at things. And we noted that in the country where you have a little bit more of regulation, like South Africa, India, even Brazil in some cases, the results in terms of ESG performance was actually relatively good. So I think this has always to be kept in mind. And in the case of India, the efforts done by the government in terms of regulating financial market, ESG reporting measures, I think there has been a number of measures put in place for the 1,000 biggest company with specific reporting requirements have been put in place 2 or 3 years ago. It shows that there is a movement. Actually, I personally think that this regulation is necessary because it's very difficult to let the company to handle it by itself. So you have to create a level playing field. The last point I want also to mention is that, again, referring to the international effort, there is a Sustainable Stock Exchange Initiatives, which is under the aegis of the United Nations, and a number of emerging market stock market are part of this initiative. That is, there is an awareness and movement is taken even if we are not in the best of the world.
Wonderful. Thank you so much. I'll pass the word to Lourdes for some closing remarks.
Thank you very much. As we are now witnessing the meltdown of a Silicon Valley bank, or almost meltdown, or hopefully not the meltdown. So that reminds us that these crises are not only from emerging markets, but everywhere. So just to close, saying that this is India's year, that when India is hosting the G20, and we are very optimistic at EMI about the future of this great country. Thank you very much, Ravin, Nanda, Chen, and Miroux, and the Cornell team for their support. The Emerging Markets Institute Cornell webinars allow us, EMI, the opportunity for bringing to the fore current business issues in emerging markets. So issues that you cannot cover in the Emerging Markets Institute's report, issues that are very conjunctural, but at the same time, very important. So we are looking forward to continuing the collaboration, and the next one will be on central bank digital currencies on May 10th, and we are already preparing it, and we'll give more information later on. Thank you very much, Chris, and all the team for your support, and great to working with you as always, and thank you to the audience for their questions and for attending the webinar. Thank you very much.
Thank you. Thank you.